Hello again, people. Right, it's about quarter to 5 on Sunday afternoon, and I love charts so much. I spend all day studying them, on and off between family stuff and whatnot. And I just wanted to bring to your attention something about these 3 candle reversals. Trends within trends. So, I learned this stuff, or the progression was from swing trends like high, low, lower high, lower low, pullback, continuation. So, how can we enter the final part, swing 5? Swing 1, swing 2, swing 3, swing 4 is the pullback, accumulation, distribution, whatever, and then swing 5 is the trade. Always has been, according to the stuff I was taught, and I think it's the case in stuff like Elliott wave and stuff like that. That's one of the only things I never bothered studying. I didn't need to, because what I was doing and taught right from day one 15 years ago was this style of trend analysis. Elliott wave had been studied by the guy that taught me, and he had discounted it, so I trusted his judgment and stuck with this. So swing 1, swing 2, swing 3, swing 4, trade. Now, talking of candlestick analysis, I'm not going to go up a time frame. I haven't looked at this, I haven't sort of cherry picked it. All I'm going to say is that is the major trend, and within that major trend we also have these miniature trends: high, low, lower high, lower low, and close, or low high should I say, higher low, higher high, and then the reversal, close. That's the continuation. That's the pullback to test old support as potential resistance, and you'll probably find that on the left hand side, to be precise. Always look to the left, because the major support and resistance is always on the left hand side. This can't be considered support here, valid support, because it hasn't created a higher high. It's on the right hand side, so this in my opinion is minor support. Anyway, back to the trends within trends: high, low, lower high, lower low, pullback, continuation. And then what have we got here? A perfect low high, higher low, higher high, followed by a high, low, lower high, lower low. Finally we get a close below here, below the first penultimate candle, if you like, the one before the final candle that fails to make a higher high. And what do we have? We have a pullback to test some sort of support broken to act as resistance, and then a continuation. This is a daily chart, so you've got 2 days worth of price continuation to the downside. These things happen all over the place. There's one here. Notice this failed to close above that. High, low, lower high, lower low, final low, low, high. All of this is sideways motion. That's a range, so it keeps you out trading in a range, although you could trade that on the H1 time frame and the 15-minute and so on and so forth. That's the high that we have to break and close above. None of this did, so it's held as resistance. We better just check that, and it's always absolute precision. Doesn't matter if it did actually. That didn't, but this may well have opened up. It's a daily chart, so it could be a gap up. We need to have opened above 79177, opened 79161. So no, it held, didn't gap up. Doesn't matter, because we never trade in a straight line. We always wait for the pullback, and as it happened, this collapsed, and then we've got the low, high, higher low, higher high, high, low, lower high. Well, that's an inside bar. Carry on singing the song till the low is busted, pop back to test old support as resistance somewhere, and then continuation. So valid trade to the short side, valid trade to the short side, inside the massive trend. Swing 5 is the entry, and it goes on and on. This is probably some sort of valid trade to the long side. Difficult to see which is the lowest low. I think it's that green one, so we'll take that as red. High, low, lower high, lower low. So we need to sing the song. We've not made a lower low, so we sing low, high, higher, low until we break and close above, which looks like might have been this candle here. We can double check that. We'll dump that one now. Yep, that was the close above that red high, that red candle's high. That was the confirmation to go long. This is the pullback to test. You can clearly see there's a price pivot zone, PPZ, some sort of resistance, because it's the price has gone up and come back, gone up and come back. It's tested it again once the break has happened, which generally happens. How do we know? Old support, and this is goes back to actually the point Michael made about, do the opens and closes have any significance or not? Yes, they do. Look, quite apparently that was tested. Now these will be, no doubt they will be significant levels on lower time frames, highs of candles, potentially high of an H4 or something, but based on this chart alone we can see it's done exactly what I say it would do, and that's what gives you the confidence of entering your trades. This instance it pulled back further as well, and once again, as you said Michael, have the opens and closes have any significance? Yes they do, but what this would have been a potential reversal on the lower time frame, something like an H1, and all you do when you've got this ranging situation going on, because remember these are day charts, is you just keep waiting for everything to come in alignment. And what will happen as a rule is the sellers will be depleted, no more selling power to the downside, and you will get in finally with a and when the sellers run out, obviously the price bursts up. Now I mentioned about this, not having looked at this, we could have a look at this and see whether we have, oddly enough this is a reverse 2B reversal going on, low, high, higher, low, higher, high. There is the high for Vic Sperando's Jobby. When this bar low is closed below, that's when we can go. Have a look at 2B, that's the 2B there, swing 1, swing 2, swing 3. There's the level you need to put your sort of trigger bar on. The bar that breaks that is the low that you need to trade the break of, and I personally want to trade the close below, and then the price crashed. Look up 2Bs if you need to reference how that looks. Vic suggested that the subsequent bar that breaks through that high could be used as the break, and there we have my 3 candle reversal. Low, high, higher, low, higher, high, fails to make a new high, high, low, lower high, fails to make a new low, lower high, makes a new low, and continues to do what it... Oh, and this is the point I was making. That's Vic Sperando's subsequent break bar, and the low of that was closed below, and then we've gone back and tested some sort of support and resistance. In fact, it went up to the open of that candle just beyond, and then crashes. I don't want to overcomplicate this method, so I don't really want to introduce breaks of open and closes, but they are significant, Michael. So if we look into this, the higher time frame on this, the weekly is a pain in the backside because it does have these what's it's thrown in, gaps. Generally get gaps on the weekly. just need to double check that because I've got this extra. There it is there. Go to the weekly, which is there, and in fact you can see exactly what I was about to say, and I didn't cherry pick this. Low, high, higher, low, higher, high, high, low, lower, high, lower, low, and close. And there's the test. It happens so regularly, guys, that you could trade that north to test that low there. And this is GA, you know, I don't, these charts, it happens the same on every chart, guys. Certain spiky ones are a little bit harder to trade. So, you know, you could have got in on that reversal there, waited for the pullback, dropped down to the lower time frame, daily, watch this pullback going on. That's the pullback we just talked about. And then sung the song, low, high, high, low, higher, high, high, low, lower, high, lower, low, close, pullback, continuation. And you drop to the lower time frames to trade that reversal there. And there's the low, high. We don't worry about the higher, low, higher, high thing. You know, it doesn't have to be a higher low. It just has to be a higher high, and when it drops, as long as it closes below the low of that candle, that's our break of support. And there's even the test. Look, another test. That support was broken and it got tested to the pip by the looks of it, and the price crashed. And how do we get into that one? Carefully, we drop to the lower time frames and watch the price action again. And we can't see that pullback on that one, so we drop to another time frame. Hopefully I'm going to have the data here, and we can drop to another time frame, and we can, if we get the 5-minute data, we will see the low, high, higher, low, higher, high, and then the high, low, lower, high, lower, low, until the close, the low there, that low there, which was this. Let's have a look actually. That is how we use multi-time frames to get into these trades safely. It was either that candle there. Let's go up a zoom. The close was 79874. I'm looking at the green line there, 79875. So it failed to close by 1 pip, 1 micro pip. What did the open? The open actually gapped down. Oh, hang on, let me just double check. That close, I got that wrong, I think. The close, 874, yeah, it closed 1 micro pip below. Sorry, the line was 875 and the close was 874. That was the trigger to go short. Even then we got the lower, the pullback. You can just see the wick above the line, sorry, there. It's got a wick, slight wick on it. Hopefully we've got the data for M5 on this. What are we? 3rd of the 7th 2019. There it is there. We're not going to get the minute data, unfortunately, but oh, I forgot to move my mouse across, I think. But there's the pullback. That's the pop across the level, and then, you know, then the price has crashed. So you could wait for a break of the candle's low, or you just enter it and put your stop here, and you've got an entry from a daily or an H4 reversal to the short side using the 5-minute and ultimately the 1 minute and the 5-minute stop. Hopefully that makes sense. So you're entering an H4 or daily reversal to the downside using an M5, and if we could have gone on to M1, an M5 or M1 stop. That is why this method is so incredible, in my own opinion. Okay, that video was a lot longer than I intended it to be, because I just thought I'd just make a quick video, end of day, you can never have too much of this information, in my opinion. And then you could start drawing, you could have been drawing your descending trend lines, which I do. I wouldn't be entering a trade just based on all this sort of hindsight information. Of course, I would be drawing trend lines in my own particular way and watch my videos. I don't consider a contact from a trend line or the level to use unless we've broken the low of the previous lower low. So this doesn't become a connection point until this low is broken, and you can clearly see it wasn't at that point, but it was at this point. And then this high couldn't be connected until this low had been broken as well, which both of them did at the same time. So, and if that pops up over that one, then this becomes the most important level. And then once this low here is broken by the new low there, we can draw, this low here is broken by this price action here. This becomes the new valid reversal point. And the beauty of this is it can then get you into the tightest reversal, and then you use the higher time frame 3 candlestick reversal method that I've talked about. This becomes a valid connection level there, because that low's broken by price here. That didn't connect to the gusset there. And once you break these levels, then they become, you can extend them, and they become stepping stones in addition to the stuff that I've been teaching. And all this is calculated way before. These lines I've calculated, I showed you how I calculated them way before we consider entering the price. And look how price respects it. That one's come right through there and been respected 3 or 4 times. There, and finally broken through. So that's just as useful to you as well. And then when you add the histogram alert, which is free again, to the game, this above 0, above the 20 is the time to go. And then you've got the 3 candle reversal method going on as well here. The highest time frame takes precedence, so I'd want to see, doesn't matter really, there's one there. This one happened here and then continued up again. This is a 3 candle reversal at this point. Low, high, high, low, high. Oh, sorry, I do apologise. High, low, lower, high, lower, low. That's an engulfing bar, outside bar that's broken there. That still counts. So this instance is a 2 candle break with the addition of our dynamic descending trend lines, you could call them really. And it goes on and on and on, guys. So there's so much of interest, I am certain, to price action traders in this stuff. I hope you like and subscribe to my video channel, and it gives you value for money. There's a 2B reversal here, you can't miss them. High, swing 1, swing 2, swing 3. That's where the poke bar or the sort of trigger bar low needs to be put. And once the candle that breaks that through that green bar, that's where you want to be putting your resistance break level there, and that is the reversal level. And that once that's closed, I'm all over this like a rash. And 2B reversals was how I developed this precision candlestick method. You've also got your fantastic histogram alert to use as well. That's a 2B there. Swing 1, swing 2, swing 3. This, draw your line at the low of that. That's the candle that broke it. Once the high of that candle is broken with a close, which is there, then the price has just gone up. And you've got your histogram to as belt and braces. Break of the 20, that was the perfect entry. but the 2B reversals are nowhere near as important as what I developed the method into after the 2B reversals. So okay guys, there's enough information for food for thought there. Longer than I thought, as I said. Now it's time to walk the dog again and prepare for the evening. So have a great Easter Sunday, guys, and if you've got a bank holiday in the UK tomorrow, have a great day, and thank you for watching.